following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote's by Andre Gide. Be faithful to that which exists nowhere but in yourself. Market-wise, let's take a look at it out here. Dow Industrial's down 9, Nasdaq's down 9, S&Ps are off 5.5. Gold contract up $6.70, traded at $1,204 an ounce. Silver up 32 cents at $16.55 an ounce. Platinum up $5.50 at $1,168 an ounce. Light sweet crude up $1.57 at $50.86 a barrel. Bonds, the ever-ready bond market, folks, will not give it up. Bonds were basically screaming out here yesterday. Wide price spread, accelerated volume, same setup. 10-year up 4 ticks, 128.26. 30-year up 27 ticks at 147. Now, the 30-year is basically taking the lead once again. The 10-year had the lead out there yesterday. In a longer-term aspect of it, the 30-year has always been dragging up the 10-year. That's the last few years we're talking about. King dollar. King dollar down 321 ticks at 94.24. That's going to be going after the February 3rd swing low. We'll see whether we get volume out of the market at that level. Euro up 19 ticks at 113.59, and the yen is down 17, trading at 118.81. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. If we take a look at this SPY, folks, this is pretty wild, okay? So, bottom line, we've had higher price, lighter volume, a continued basis. In this particular case, just even the last 15 days, every single day it crawls up, right? Well, guess what, folks? What we're going to see out here today is pretty phenomenal. You're going to see volume that's 40% lighter than yesterday. Yesterday was 50% lighter than Friday on the ETF structures. Bottom line, we're at 211.38 right now on your on your SPY. Guess what? There's no more buyers up here. No one's in the store. No doubt they've got it to higher price. This type of contraction in volume is saying this pullback's going to be here. The real key is going to be because we're at 211.25, 32 right now. The back inside the range would have to, the SPY has to get back inside 208.97. Bottom line, this type of contraction, it's going to be here. Now, the thing that's wild is this. We're coming into the end of the month, and we're coming into window dressing. So when you look at that correlation, it's like, okay, window dressing, it's very easy for them to hold up the market, but guess what? On many occasions, window dressing gets into window breaking. I suspect that's what we're going to have here. The Qs, it's just amazing. And it's right across all the ETF structures, by the way, folks. This is not about across one sector. I don't care whether you pull up it doesn't matter what ETF you pull up. Every single one of them. And all the markets, by the way, went to higher highs. We take a look at the 3 Qs. The 3 Qs got to a price point today of 108.86. Right now we're at 108.19. It's 106.25. We have to get back inside. You've done 13 million shares thus far. On the 3 Qs, yesterday we did 19, and on Friday we did 28. The IWM, we take a look at the IWM, what we have with the IWM, the small caps out here have done 11 million shares, made it to 123.04. Now the high in the small caps is 123.05. Same type of setup, though. You're dealing with 12 million shares right now versus 20 yesterday, versus on Friday, 30 million shares. So big contraction, huge contraction on volume. Gold contract. We go take a look at the gold contract. This is what you have with gold. Gold is up $7 right now. That move, we need to see, if you're a bull in the gold market, the metal market, you want to see much higher move than that, number one. You want to see price spread. Bottom line, that's really a sideways move out here today. We are at 1204.40. And what that does, that gets us in a little higher range. That gets us in a range that we can go after now, the 1226 area. Bottom line, we want to see this gold contract back inside is 1228. That's the way this is set up at this particular point. Silver, we take a look at the silver market. Silver had a nice little jolt higher today. Silver is always much more volatile than gold, though. Let's see, SIK5. Silver market out here. Let's see. We got some real juice in the silver market. This is what we needed in silver, too. SIK5. Okay. Silver market. We did out here 39,000. Yeah, 38,000 contracts. The 38,000 contracts is a nice number, and we closed at 1656. What happened with silver is this. Now, this is important in the whole metals context, and this is what it is. We got back inside the range from February 17th. That's when silver came down from a price point of 1740 to 1630. We are at 1656. We got to 1675. The larger range in silver is 1679. The way that we pushed today with volume, I expect that we're going to see that level, and we're going to see that level very quickly. Bonds. We're going to take a look at the bond market. What do we have with bonds? Bond market, bottom line, yesterday had wide price spread, accelerated volume, all of the above. Bonds want higher price. Bonds actually want their high. So we'll see how it attacks that high, and is it going to have the juice to take that high out? Right now, the 10-year has done 1.8 million contracts. Yesterday, oh man, you talk about expansion with volume. Yesterday, we did 2.4 million contracts. Big number. Bottom line, though, you're going back topside, and you're going back with juice. 130.29. That's what we're going after. 30-year. We go take a look at the 30-year bond. What the 30-year bond is done is this. U.S. $30-year bond. It's trading at 146.28. We've done 528,000 contracts. The 30-year bond, huge follow-through with volume, too. Yesterday, we had volume out here in the 30-year of 699,000 contracts. Today, you're following through at 523. What that's setting up is the bonds, the 30 years, are going to go after the 151.20. It's a big number out there, folks, a monster number. Now, let's go to King Dollar, because King Dollar is actually going to give us more information than anything that we've actually gone through. Well, the bonds are giving us decent information. But King Dollar, I suspect, is going to give us some of the best information, and this is why. The King Dollar has been going up since 2011. Sweet run. Thus far, it's topped out on the 26th of January. That topping out was 95.85. From the 26th of January, it has tried to make it up to those highs multiple times, like 6 or 7 times. Well, it couldn't even make it to the high that was established on February 11th, continually failing. Second part of that is the swing lows. The swing low that was established on February 3rd at 93.38 wants to get tested. We'll see how that test gets done. Now, the cool thing about King Dollar, the way King Dollar is set up right now, it's going to give us an answer. Correlation goes like this. You go into the 3rd of February and you go in with lighter volume. Guess what? What that means, hey, King Dollar's going to go higher. You go into the 3rd of February and you get an expansion of volume. Guess what? Monster correction inside the dollar index. That's if you get an extension of volume. Why? Because then we're going to have volume off the high. You go into King Dollar and it breaks price, the volume's about the same, a little more. That just means you could have a regular correction. That's on the downside. On the upside, which it hasn't been able to do yet, which would give us just as much information, by the way, okay? On the upside, you go into that high, that January 26th high, and you get juice behind it. Yeah, you can go higher, no doubt. So that little setup in King Dollar is going to be crucial to watch. Why? Because the market cannot stand the dollar coming lower. It's just an opposite of what we've had happening for years. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. The Dow is flat. Nasdaq's down 5. S&Ps are off $4. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials are up 2, Nasdaq's down 7, S&Ps are off 4. We get gold up 7.20, silver up 33 cents. Bonds, they just keep going. You get the 10-year up 3 ticks, 30 up 24. And now let's go to our man, Mr. Andy Hecht, folks. And don't forget, every Tuesday, Thursday after my program at 5 p.m. Eastern Time, 5 to 6, Andy does a great program. He is doing a outstanding webinar tonight, right after this program. We're doing it at 6:30. It's a free webinar. What is it all about? What are the energy technomentals telling us? You can come over to our website at TFNN. You're going to see it right on the front page. Sign up. Starts at 6:30, 7:30 Eastern Standard Time tonight. And bottom line is that you can expect a great webinar. Andy Hecht, what's going on?
I must say, you are looking very dapper today.
Oh yeah, I had to get dressed a little. It was a little chilly out this morning.
Yeah, I figured it was cold there. I saw that sport jacket on. Is looking good, Tom?
Thank you. That's too funny, I know. And you know.
So listen. So I have prepared a what I think is a very, very good overview of what's going on in the oil markets. And
nice.
As you know, I have a technomental method of looking at markets.
Yes.
So we're going to look at the technicals in oil, but more importantly, we're going to look at a lot of different things. We're going to look at, when someone throws out the question, where's oil? Or, they say, okay, where did it close today? 50
Yes.
bucks and change?
Right.
Okay? But the question should be which price, what delivery, what location, what grade. What consumers don't buy raw crude; they buy
Right.
products.
Right.
And what we're going to do is we're going to go through all of those things that make up market structure, from crack spreads, location spreads, term structure, fundamentals, oil equities, everything. And over the course of the hour, I think it'll be a really good overview to give people a feeling on what's going on in the whole oil market and where it might be headed, and what signals to look for.
What's so cool, Andy, is that, folks, we talk, of course, at TFNN, we talk equities, we talk futures, we talk currencies. The aspect of oil, we use it every single day. And as Andy runs you through this, what's really cool is that whether you are in the future market or not, that has nothing to do with what this workshop is about, because what happens is that as that crack spread gets great for the refiners, guess what? If you happen to be in the equity market, that's when you want to be buying. And when it was getting crushed down, right, that's when you want to be selling, because that formula is pretty cool, man.
Yeah, absolutely. I mean, crack spreads are a real-time indicator of refiners' profits. Now, they have nothing to do with exploration, drilling,
right.
oil services.
Right.
So oil is it's like a really complex puzzle. And what goes into that $50 price are so many different inputs and variables, and no matter what, like you said, Tom, no matter what you're looking at, whether you're looking at buying stock in Walmart or any
point.
other anything
right.
else, they are all affected by the oil price. Transporting goods to market, what are they using? They're using trucks. What do trucks run on? They run on diesel fuel.
Yeah.
So we need to understand oil. And it's not just that nominal price that we see on the screen each day. There are so many moving parts to it. So what I'm going to try to do is explain that, go through what's going on in each of those moving parts, and come up with some kind of conclusions and understanding of the market. And the best part about the webinar is it's free.
Yeah, no doubt. I mean, that's pretty amazing. There's no doubt. And oil had a heck of a volatility out here today, didn't it?
It did. But you know what, Tom? Oil between June and January was like a double black diamond ski slope.
Yeah, right.
But we've gone since, in February now, we are starting to trade in a range. It is going sideways, and that's important. And that's very important. The other thing very interesting, now the U.S., our production is over 9 million barrels a day. We are the biggest swing producer in the world, and we, in many ways, are much more important to the oil price than OPEC is.
How cool is that, right?
It's very cool.
Yeah.
It's very cool. And we're the reason that the price has gone down, really.
Right, because I was. This is not switching gears on you a bit, but you talk about how oil can be bust or boom, folks. Okay, there was a picture that I saw this morning. So Midland in Texas, folks, is where huge amounts of, that's one of the first, if you read back on all those Getty books, that's where the oil fields were forever, okay? And what has happened with the fracking is that those oil fields have got huge again, right? Mm-hmm. And they were showing pictures, Andy, of a normal, 4 months ago. Every single day, folks, there's a private airfield there, and every single day there's 30 spots for private jets coming in. You never could get a spot. They showed a picture this morning. It's only one. There's one jet.
Right. Yeah. But and also the other interesting thing, which we'll talk about a little bit in the workshop, is how all of the wells that we've been drilling over the last couple of years, they are a lot of them are gushes. They'll produce a lot of oil quickly, and then they decline. They decline very quickly. So while we're producing a lot now, and the production lags the price.
Okay.
A year from now, based on today's price, we're going to be producing a lot less. So there are opportunities here, and we have to keep our eyes open for the right spots, and the technicals will help us with the right spots. But it's not technicals alone in oil. It's all of these moving pieces. We got to look at crack spreads and processing spreads. We got to look at location differentials and even differentials in different types of crude oil.
And what is a processing spread?
A processing spread is a crack spread. It's where you process the crude oil. It's just a synonym. It's where you process the crude oil into oil products like gasoline, heating oil, jet fuel, and all that stuff. So very, very important to look at these things. I mean, those things are going through the roof.
Yeah, gasoline's up 5% today, man.
Exactly. People say to me,
5.1%.
I saw oil. Right. I saw oil went down, big. How come gasoline went up 20 cents at the pump last week? I said, because you're not putting raw crude oil into your gas tank.
Yeah, right. Yes, no doubt. No doubt. Amazing.
So I'm really looking forward. I hope, anyone who's out there listening, I really encourage you to spend an hour with me. Check it out. I think it'll be really interesting, and I think you'll come away learning something and kind of understanding the oil market a little bit more.
I would say it's going to be the best hour of the day. It's a beautiful thing, man. No, seriously, listen, I love you anyway, but the reality, and I'm not kidding, folks, and I'm not kidding, Andy, the reality is understanding how that business really works is dynamite, man. It's just cool, man, because then you as you're going, whether it's heating oil, whether it's gasoline, whether you're looking at plastics. I mean, I look at things differently because of, a couple of years ago when you basically on the air, even talking, get me a good understanding of how it is. And what's interesting is that you do have to, I have to listen to 3 or 4 times and really to grab it in too, because each time I grab one part of it. Do you know what I'm saying? Which you do a great job. I'm just saying there's just a lot of information, right?
Exactly. And the beautiful thing for anyone who's attending today is I have 22 slides. So even if you don't get it immediately, because I tend to talk fast, like most traders, you get a copy of this presentation,
and you can
you can review it, and the concepts are once you look at them a few times, they stick.
Okay, well, listen, I'll let you go. I know you're getting ready for the workshop. Thank you so much. Have a great one, safe one, and we look forward to hearing you in another hour and a half.
Thanks so much, Tom. Enjoy the rest of the show.
Okay, man. Stay right there, folks. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. And, folks, in order to sign up for Andy's webinar, what you do is this. And if you happen to be in your car driving home, no big deal. You got plenty of time. The webinar doesn't start until 6:30 Eastern Standard Time. You go to the front page of our website at TFNN. You're going to see it right in the carousel, free workshop by our man, Mr. Andrew Hecht. It's going to be an outstanding workshop. Now, let's check this out, okay? There's some stocks that are moving out here in a flat market. And when we take a look at, I'm going to start out with one that is absolutely getting smoked, and it's Lumber Liquidators. Lumber Liquidators, folks. Okay, I'm sure you've heard the advertising. It's all over the place. Lumber Lumber Liquidators is down $17 today. And what's going on is that they come out with numbers, didn't make the numbers, but that wasn't a big part of it. Inside their conference call, they said that bottom line, 60 Minutes is doing a story on them, and they they said that the story wasn't going to be that great. That came out, and oh man, it got toasted and roasted. That being said, I want to show you something with Lumber Liquidators, okay? And what is it? It is the classic go up with light volume, do a counter trend bounce, and absolutely get toasted. And what you have here is this. So Lumber Liquidators, when we take a look at this chart, Lumber Liquidators in February of 2014 was trading at $103. First leg came right down, came down with monster volume, and traded into the July low of $54.31. Got to a lower low of $47. Well, when do we do that? The October 15th low. The October 15th low, folks, are going to get tested on everything. But check out what Lumber Liquidators did. You had an October 15th low on a weekly basis with 12 million shares. Then, what do we do? From October 15th, you went all the way from $47 and you climbed all the way back up to $69. So we're talking what? $22. So you're talking almost a 50% move. That 50% move, now I'm going to put this on a daily so you can see the correlation, how no one's in the store, bottom line, folks come in, they buy, they think they're going to be fine. It's like not even close. Bottom line, hangs up there for a bit, okay? So Lumber Liquidators was making highs at 500,000 shares after it was going down with 2.3 million. Made an additional high yesterday with 1.2 million shares, and you already get 14 million shares today. Bottom line, October 15th is game. Counter trend bounce, stay away from them, like in an incredible way. And I suspect what you're going to see with the Lumber Liquidator deal is this, is that the amount of advertising that can be done and the amount of sales that can be done is this. I'm talking on a fundamental basis now because I know this company because I've never dealt with them, but I priced them out in a big way, okay? And what you have is this, is that this company does a lot of advertising. They're expensive, and if you price them out, there's like not even close. And, you know, there's a lot of different competition out there that you can get it a lot cheaper. The cool thing about doing floors, folks, goes like this. If you're breaking down a house and you're doing floors, okay, the cool thing is that it's a per square foot deal. That's what it comes down to. That's all you have to worry about. What is it per square foot to lay it? What's the underlayment per square foot? What is it going to cost? End of story. Because the wood structure out there, they're almost all the same. There's a lot of different types of woods, but most of them are the same. To go back to our man, Mr. Andy Hecht, also, that webinar, folks, that webinar is 5 o'clock to 6 o'clock Eastern Standard Time tonight. I apologize about that saying 6:30. Most of the time we have them at 6:30. Andy's webinar is 5 to 6 Eastern Standard Time tonight. Sam, let's go over to Sam Adams. I'm not sure what's happening with good old Sam Adams, bear out of Boston, but the bottom line is that this little baby is down today with some real juice behind it. You know, so maybe these craft companies are basically hitting Sam up, you know, and Sam's down, is that right? It's down $32? No, it can't be. It is. It's off 11%. So Sam's down $32. This is another classic. This is a classic. You're basically you got highs up there. Oh, this is a trip. Yeah. You got pure distribution, man. This is intense. So if we take this and we put this on a monthly, what you're going to see as this baby's going to shake out, you're down $32 right now. You're trading at 278, 265 is the next level down, and we'll see whether it can stay that, you know, hold that level. But this baby can get to a 142, which would be pretty intense, man. That would be like really intense, no doubt. The gold stocks, we had a couple. You get a couple gold stocks that are really starting to move with some action out here. If we look at Rheingold Resources, and Rheingold's important. The reason Rheingold's so important, folks, is that this has been a leader for quite a while inside the gold sector. Rheingold today is moving with what? Wide price spread, accelerated volume. It's broken its downtrend. If you take a look at Rheingold, Rheingold had made a high January. That high was established at 85.84. Come down to a sign of strength at 75. We're doing 700,000 shares today. You broke the whole downtrend from $85. Now, what this sets up, this is what's really cool about this, because inside that gold and silver market, you have a lot of these setups. This is very well could be a really sweet ABC structure on the way up. What we had done, when Rheingold in December was trading at $61, it goes up to 84. It pulls back to 75. That was just over a 0.382 retracement. So it's showing that it's really strong. You know, inside a contraction, meaning at 382, 50618, when you do a 0.382 retraction, that's a very strong stock. A normal correction is 50%. A weaker one would be 0.618. That's showing that, guess what? You're strong. You start moving with volume again, and if in fact that is going to be, if it is an ABC structure on the way up, there could be really some juice there, because you're talking, let's see, what, 60, ballpark this, 61, 71, 81, 24 bucks. You're talking 100 bucks. That's how this little baby would lay out. And there's a few more of them that are out there that are set up pretty nice. Some of the high volume stocks in this low volume market, and it's particularly low volume out here today, Hewlett Packard. Hewlett Packard's getting the smoke. That's down 390. You get Apple off 374. Oh, what's happening with Apple? That's interesting. Apple hasn't sold off, period. But what you do have happening out here today, you get a slight sell-off in Apple. And guess what? We got an expansion of volume. This is going to get interesting here. Okay, so we'll see where Apple shakes and bakes. But what we do have is this. Apple had hit high out here of 133 yesterday, down 375. Not that that's a lot. It isn't. But after the ETF structures today hitting those higher highs with dramatically lighter volume and then failing off of those highs, that is a big heads up, because what you do have is that as you continue to go higher, there's only so many buyers. Once everyone's in, then it's like, who are you going to sell to? In Apple's case, it gets really interesting, because we were bringing up on Tuesday, 1 out of every 5 hedge funds owns Apple. That is a big number, folks, okay? Everyone is going to try to hang on until the end of this month, because we're right here. Where, you know, you're talking about what today's Wednesday, right? We have 2 more days. That's it. 2 more days. Books close out for the end of this month. They're going to try to hang on as much as they can. Window dressing, I got a feeling it's going to be window smashing come on Monday. That's the way this seems to be setting up at this particular point, because all that has to happen, portfolio managers got to keep their gains in place till Friday. Reports go out. Everything goes out. You get a turn come Monday, Tuesday. There's a big heads up there. The dollar index, I suspect that's where it's going. The bond market itself, the bond market has been projecting on a continual basis, on a consistency basis. Bonds themselves consistently have given the best signals that the market wants to pull back, that rates continue to be lower. And as everyone's scratching their head, it's like the Fed said, basically setting up for a rate hike. The world's setting up for a rate hike, but the market's not setting up for a rate hike. The market is saying, no, rates are not going up. In fact, rates are going down. That's the way this market is setting up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is up $6 right now. Nasdaq's off 7. S&Ps are off 3.5. Don't forget, our man, Mr. Andy Heck. That webinar, folks, is 5 to 6 Eastern Standard Time tonight. And if you can't make it, bottom line, you can still register and get the archive on your page for 30 days. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Coming into the close, we got the Dow up 13. Nasdaq is up 2. S&Ps are Nasdaq is down 2. S&Ps are down 2 also. Inside the NDX 100 today, which putting juice into it. Well, the index is down 12, but putting juice into it, meaning pushing it higher. As Vipple Communication is up, that's up 35 cents. We get Vertec Analytics is up $4.65. Priceline is up $31, and Yahoo is up $1. Taken away from it on the way down, American Airlines has some problems, evidently. That's been down on a continual basis. That's down at 186. That's the leader leg. That's the laggard, the top laggard. You get Express Scripts down 271. Apple is down 343. That's the number 3 one. And Wynn Resorts is off $3.40. Wynn Resorts is going after that December 15th swing low. Inside the Dow Industrials, what do we got putting juice inside the Dow? The leader out there, and quite a leader too, by the way, is McDonald's. Big Mac is up 377 with volume behind the move, 2.4 million shares. So who knows what that's all about. GE, well, it's about buying. GE's up 52 at 25.91. You have Nike up 144, and you have American Express up 124. Taken away from it, on the way down, you have Intel down 49, United Health is down 139, Big Blue is down 193, and you get Walmart off 88 cents. Inside that structure, Walmart wants to go test that swing point that was established last week when they came out with their numbers, which is on 82.55. IBM has much larger problems. IBM, folks, has been building cars for quite a while. Can't seem to handle a 165. If you take a look at the IBM chart, it's pretty amazing, actually. There's someone sitting. There's a fund sitting at 165, and that's what they want for the stock. And each and every time it's going up there, more than likely that's what they're getting for the stock. If we take a look at the filings, the last filings, just to see who is moving the stock out, what we have is this. This always gets, so check this out. So Wellington Management, and in Boston, you got Wellington, MFS, which is Mass Financial, and Fidelity. They're all basically within a block of each other. Wellington, moving it out. Wellington, their last filing as of December 31st, they sold 3.2 million shares, and they only have 2 million left. They're probably out now. If you go right down, MFS also is a seller, 1.1, but they get 5.9 million shares left. So they get some good numbers left. If we take a look at who is buying and getting toasted and roasted, oh, that's interesting, man. So check this out. Berkshire Hathaway bought 6 million shares coming into the last quarter. They own right now, Berkshire Hathaway owns 80 million shares, approximately 8% of IBM. Yeah. If we go over and we take a look at BRK, and so inside the XLF, this gets interesting because Berkshire Hathaway, folks, BRK, Berkshire Hathaway is the largest weighting structure inside the XLF. And that changes quite a bit. But Berkshire Hathaway, with our market at all-time highs, can't seem to get this next $5 up. It had come off the high of 152. It got down to 144. Been trading, at this level for quite a while. When I say quite a while, we're going back November of 2013. And I said a lot of that has to do with Berkshire Hathaway, no doubt, is just one large hedge fund. That's hedge fund. You could say it's a private equity fund because you could take the definition of a hedge fund that you're going to be buying and selling and all this. Bottom line, he likes to buy large companies, keep them forever, and hopefully, things work out. And over the course of years, they certainly have worked out for him. in this case right now, a lot of the larger ones that he has are basically have got smoked, including American Express, Coca-Cola, and each one of those, because they're large, very large positions in the context of how large the companies are. You know, you own 400 million shares of American Express or Coca-Cola, and you're going down $10. That is a large paper hit. That's what they are, and it is Coca-Cola that owns 400 million shares of. I knew he owned 400 million shares of. But bottom line, you get the gist of it. The gist of it right now, inside the market in general, inside the XLF can't seem to get to the highs. The XLE out here is also having a hard time bouncing, and that's with oil out here today. Oil rejected lower price. You know, if we take a look at this oil market for a second, let's see, CLJ5. CLJ5. So we had oil trade down to 48.43. We've done 405,000 contracts. Yeah, see, that's a rejection of lower price on lighter volume. And then you start moving with volume again. So that means that oil's going to, try to run to the top of the range, which is 54.92, and very well maybe an ABC up. We'll see. We'll see intraday how that thing is shaking and baking, and that will have to do, no doubt, and you'll see that correlation. That correlation is going to come clean with we get supply and demand, but that whole U.S. dollar. If in fact when we go after this February 3rd swing low. And I suspect we're going to see that, next couple days, because right now the dollar index is at 94.23. 93.38 is the number. You go after that. When we get down to that, that's going to say, okay, we're going to make it, break it. Is it going to test it with lighter volume? Test it with lighter volume, goes topside. Test it with heavier volume. Huge deal. If it tests it with light volume, that also would be a huge deal, because that'll be saying, okay, you got to get ready. It's going to go try to bust up the top. It hasn't been able to do that since January 26th. So that's a very long time frame when, in fact, it tried it actually the last 7 days to try to get up into that whole area, and just hasn't been able to get into that area. We go take a look at this. McDonald's is going to get interesting. It's like I'm not quite sure what's putting the juice under McDonald's, but it's a big number. Let's see. When you bring up McDonald's, it seems like you only have bad news on it. So it's certainly not the bad news. It's certainly buyers that are pumping that up. And if we do put McDonald's up on a monthly basis, bottom line, you get a consolidation that McDonald's has been in, and it's been in that consolidation since July of 2011. Pretty amazing. This is Tom O'Brien. This is TFNN. Don't forget, folks, our man, Mr. Andy Heck, going to do an outstanding webinar. It's free, 5 to 6 Eastern Standard Time. You come over to our website right here. Sign up right here, right now. You stay right there, folks. You're going to be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show. I've been listening to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by an unknown writer. Hope is putting faith to work when doubting would be easier. Market-wise, let's take a look at it out here. The Dow finished up 15. NASDAQ was flat. S&Ps were down 3. Gold contract up $6.80, trading at $1,204 an ounce. Gold, folks, we want to see more volume come in that market. You got price coming up slightly today, just slightly. Bottom line, we need more price and price spread. Silver. Better understanding in silver, no doubt. Silver was up 30 cents, trading at $16.53. What silver did have, silver had the wide price spread, had the accelerated volume. Silver basically, got inside a larger range, that larger range being the $16.30 price point, as silver makes its way back inside $16.79. 1679, folks. You make it back inside 1679, that's going to be a big number, because that would put it that silver can get up to this 1837 level. Oil. What did the oil market do out here? What we had with the oil market is this. Oil rejected lower price, had lighter volume, went higher. So we hit a low today of $48.43. Finished out the day at 50.76. That basically is setting up, saying it wants to go to the top of the range out here. The top of the range is 55.02. Bonds. The bond market is just amazing. Absolutely amazing. The ever-ready bond market, folks, the 10-year went up 4 ticks. It's trading at 128.23. Had nice volume behind the move, 247,000 contracts. What that's setting up 10 years going to go back to this 130.29. We'll see whether it can take it out back to those highs. The 30-year, you talk about juice inside the 30-year, huge juice inside the 30-year, huge follow-through inside the 30-year. 30-year is trading at 146.31. Volume was 698,000 contracts. Big number, folks. That is saying the 30-year also wants to go back to the 151.20. That's the high that's out there. When we take a look at the actual yields, the 10-year is at 1.964, under the 2% once again. King dollar. Now, King dollar, folks, okay, is the number out here. And what we have with King dollar is this. King dollar pulled back today after having tried to take out its highs for the last 8 days. We pulled back on 25,000 contracts, which is light volume, by the way. What I suspect we're going to see probably tomorrow or the next day, King dollar is going to go after the swing low that was established out there on February 3rd. And we'll see whether, in fact, they can take that baby out. It's going to be wild watching this whole thing shake out. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the S&Ps, let's take a look at them. S&Ps, folks, bottom line, you're up at these levels on air. Extraordinary air, actually. The SPY today did 69 million shares. Yesterday it did 70 million, 72 million. Friday we had done 140 million. Even 140 million, folks, is light volume when you're taking highs out. Bottom line, until we get a turn in this market, you can get higher price. It basically closed, well, all the indices went to a higher high today. All of them had lighter volume, and all of them, no, the Dow didn't. Let me see if the Dow did. Coming into the close, what had happened is the S&P gave up its high. The Dow, I don't think the Dow did. Dow was up 15 bucks. No, the Dow didn't give it up. Dow got and stayed to a higher high. The Dow had got to 244, closed at 224. The high of yesterday at the close was, well, actually, the high was 231. Bottom line, you're at a higher high. The contraction in volume across all the ETF structures say a huge amount. There's no two ways about that. Huge amount. Inside the market out here today, you had some high volatility, no doubt. Hewitt Packard basically took it on the chin. That was on the downside. On the upside, you had McDonald's up at 378. That was a nice move by McDonald's, no doubt. Some of the high volume stocks in this low volume market, this is what you had. American Express was up $1.32. That's a dead cat bounce. Big Blue down 214. That wants to go lower. United Health down 143. That was just a normal retracement. Big Mac is the one that really had some juice behind that move out here. So if we take a look at Big Mac MCD, what you're going to see is you talk about unusual that a large cap like this, well, particularly something that's been a dog, can move like that. Well, it moved. It moved with volume. 16 million shares traded out here. So big numbers. Hewlett-Packard, HPQ, just the opposite. Hewlett-Packard got toasted, roasted, all of the above. Hewlett-Packard, HPQ it had opened yesterday, it closed yesterday rather at a price point of $38.70. Opened today at a price point of $35.36. Closed out at $34.67. Did volume of 62 million, and talk about breaking bead points with volume, man. It just took it apart. So Big Blue, I mean, Hewlett-Packard is going to be going after this $31.75 level. That's where that wants to go after right now. So we'll see how that does shake out. Lumber Liquidators, that's an equity that just got absolutely toasted and roasted. Lumber Liquidators had come out with their numbers, folks, and the numbers were not great, but what that was all about is that evidently inside the conference call this morning, so Lumber Liquidators was down $18. It's trading at $50 now. And with that, on the conference call, they disclosed that bottom line is that 60 Minutes is going to do a piece on them, and what they said specifically is that the piece was going to not be too pretty. That's what that comes down to. Some of the Dow stocks out here we've taken a look at. You had ExxonMobil up 18. Disney was up 90. Let's see, Honeywell was up 9. You had Johnson & Johnson up 51. And Johnson & Johnson is having huge problems. J&J, folks, okay, for some reason, has been on this downtrend, and folks are selling it. That's what it really comes down to. That also has a high volume low at that October 15th level, that 95.10 area. And if we just do go back to Lumber Liquidators for a second, what you are going to see, and this is what's so crazy, folks, each and every one of these stocks, they're just making their way back to this October 15th swing low. Now, the bizarre thing about Lumber Liquidators is that they made it back in a day. Yesterday, the stock was $70. The swing low that it's going after, the high of the swing low, watch how crazy this is, folks. The high of the swing low, the high volume swing low in that October 15th, because that's your benchmark out there, is approximately, what, 49.50. We hit 49.80. It closed out at 50.63. That's going to blow it away. So that benchmark is important across all markets, all sectors, including the S&P. And when you take a look at this is the most bizarre part when you look at the S&P. If we just put the SPY up there for a second, and if you want to see how much higher we are, and it's like, okay, what's going to drive the SPY down there? We're at 211.63. The swing high of the low of October 15th is 187.58. The low is 182.89. It's like, okay, we'll see what's going to end up driving it down to those lower levels. But I do expect that the S&P will get there, the NASDAQ will get there. If we take a look at the 3 Qs for a second. Because what you don't have is that the 3 Qs are at 108.83, and you're talking about 90 to 92 inside the 3 Qs. If we go to the IWM, we take a look at the Russell 2000, the small caps. That's at 122.80, and we're talking about 103.54. There was a great quote today inside our Tiger's Den. Let me see if I can find this quote, because I thought this was just perfect for the type of market that we're in. And what it was about is, come on, I got to find this thing. And what it was about anyway was this: is that the headline news tonight, the Dow is down 3 points. It was something to that gist, folks. Okay, it was very applicable as to where we are inside these markets. This is Tom O'Brien. This is TFNN. Don't forget, folks, Mr. Andy Heck is going to be doing a webinar tonight. It's going to be on the oil market. It's free. It's from 5 to 6 Eastern Standard Time. So if you happen to be driving in your car, driving home right now, you can make it. If you can't make it on time, you can still sign up, because it's going to be on your page. You can go over it. Outstanding webinar. 5 to 6 tonight. Check it out. We're going to be right back, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go over. We have some numbers coming out here. First, Salesforce, CRM. That closed at $62.87. That is trading right now at $68.05. Well, that's a burst higher period. It's taken out the swing point of 64, which goes back on the 14th of October. 1 second, hold on. No, because that has that 14th of November. Big number there. There's no two ways about that. And if we bring this back, let me just see if this is taking out all the highs. It is. If we take a look at this, we put this on a monthly basis, what you're going to see is Salesforce has been a one-way stock from $6 up to the 62. Now you're going to be over the swing high of 67. 67 was the high established in February of 2014. Numbers go like this on CRM. The fourth quarter estimate was 14 cents. They made 14 cents. Revenue was $1.44 billion. I guess what we're going to see out here is that Salesforce raised its revenue forecast for fiscal 2016. That's what we're seeing out here. So bottom line is that it absolutely has some juice underneath it. It's up $6 right now, trading at 68.75. LEX. Okay, let's take a look at LEX. Emulex. Emulex closed at $6.03. This is a network data center. The company's products consist of storage adapters, network interface cards. That is trading right now up $1.30. This little baby had gapped higher January 13th. More than likely it came out with numbers then, liked it, pulled all the way back down. Now don't go after this one. What the difference is with this one right here is that if we take a look at this on a weekly, what you're going to see is it's coming into a vicious downdraft that was out there last May. So, you know, we'll see whether it can take over that downdraft, but it certainly, that downdraft was in spades. Let's go to Dan in Baskin Ridge, New Jersey. Hey, Dan, what's going on?
Doing well, Tom. I had a question for you as far as, you know, not so much about the market in general, but since you're doing the, the real estate fund and all.
Yes.
My question is, basically since 1980, rates have been dropping. Pretty much every contractor I know has only been in business for, 10 years. Basically, they've only seen an environment with decreasing rates. And I wanted to get your take on a long-term housing deal where, hey, listen, rates aren't going to stay at 2% forever, 3%.
Yeah.
And how is that going to be affecting not just housing, but, hey, housing has pushed this economy for, 25, 30 years?
Forever. Well, in our lifetime anyway, right.
At least since, 1950, right?
Yeah, no doubt. It's a great question. So check this out, because I think about this a lot, and I've seen both sides of it. I mean, the first house I ever bought, I was paying 14.5% interest. And at the beginning of rate hikes, I think there's going to be some dislocation. I mean, there's no two ways about it. And what ends up happening is that dislocation has to do with, until folks realize that, okay, let's picture we have a rate hike. If we get a rate hike, simultaneously, you're still going to need the housing product and the rent product and the selling product to go up higher than the rate hike, even on a leveraged basis, okay? So when we just talk regular supply and demand, it's like certain areas of the country would get whacked immediately. And then I suspect as rates do go higher, if in fact they do, Dan, right, the housing product itself will go higher, because the only way that rates can actually sustain higher price is if in fact the inflation does come in and gets higher. Like when we were paying 14.5%. 14.5%, folks, was 1976, 75, 76. But what was happening in that area also is that housing prices were going up 20% a year, 25% a year. You know what I mean? But you were going up. Now, this is where this kicker comes in about percentages. Now, I love percentages, but don't ever let anyone go. What you always want if you're negotiating, you want them to go up on dollar terms, not percentage terms, particularly now, because what happens is that the difference that I could see, Dan, now and then, is that houses then were maybe 30,000, 50,000, 100,000, right? Now you're talking 100, 200, 500, a million, right? So a small percentage point is a monster number for all of us to afford it. So that correlation is going to be close, man. What I've seen, even just in this run right here, there's a disconnect absolutely across the country and across regions as to what things are still worth. You know, I mean, I look at these housing numbers. I give you an idea. These housing numbers that just come out, right? They're saying that basically housing is flat. Let's say, you know, it's up slightly, up 5 or 6% across the country. But that's not a real indication of what's happening in the housing market when you look at regionally where things are. You know, regionally, if you're in San Francisco, probably where you are in New Jersey, you know, the housing's going through the roof. But now the affordability of it, where you are, if in fact you get a small hiccup, will get hurt pretty quick, just like in Boston. Because
let me tell you something. There's probably 5% of the families that are one-income families in New Jersey, unless, you know, as far as like if you're a married couple and got a house,
right?
Both people are working.
Yeah, no, it's tough, man. Listen, my daughter lives in Boston, and it blows my mind what it takes to buy a house and to maintain a house.
I forget that. Yeah, we got like, you know, percentage-wise in taxes. I mean, but either way, if you own a house, you're paying probably in New Jersey, you're paying at least $8,000 a year in property taxes.
Right, right. And
even for a Cape, you know.
No, I'm with it. No, there's no doubt. And if we talk about will houses still drive the economy? Yeah, it will. You know, but there'll be big blurps in between it. I mean, I remember the 87 the market crashed. So 89, folks. Okay, Boston crashed, Alaska crashed, Dallas, Texas crashed, Houston crashed, Orange County crashed. Because I remember I went to Houston first, then I went up to Alaska, and then I came back, and it blew my mind. Then Boston crashed. And it's so, you know what's so crazy about this story, folks, is that I remember being in Houston, Texas, right, about 2 years before Boston crashed, and these guys are telling me stories that they had millions of dollars, and all of a sudden they had nothing. And I'm having dinner with them, and I'm looking at some of their houses. I'm saying to myself, this is crazy. End up going to Alaska after that. Same thing, but it wasn't as personal because what happened in Houston, I met a bunch of people, not that I knew them, but I got a tighter idea of what really happened. Then when I started seeing it in Boston, I said, oh my God, those regional crashes will happen again, man, you know? You know, but if you're in that business, I'd stay in that business if they can stay cash flow positive. That's the number, man. The cash flow positive is the big deal.
All right, Tommy.
Okay, man. Have a great one. Have a safe one. You stay right there, folks. We'll come right back. Our phone number is 877-927-6648. Dow is up, finished up 15. Nasdaq was flat. Right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. tools. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, Market Scanner, and Trading Strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over and we take a look at ARUN. Okay, so this is Aruba Networks. And what we had out here today was this, ARUN. So Aruba Networks, folks, was up like 15% today, $3.86. They provide mobile network access services. This company, let's see what they take in. So they take in $250 million per quarter, and what we have out here is this: the Hewlett Packard, okay, which came out with their numbers. They were disaster numbers. Got smoked on the way down. Well, intraday out here, basically, I'm not sure what news service first started reporting it, but Hewlett Packard is in talks to acquire Aruba Networks, a maker of wireless network infrastructure used by hotels, university, shopping malls, and people with knowledge of the matter said the purchase may be announced as soon as next week, said one of the people asking not to be identified, discussing private information. Aruba went up $2 and up 21 rather, $3.86. This would be the largest acquisition in several years for Hewlett-Packard Chief Executive Meg Whitman. It's going to be interesting to see if, in fact, this comes to fruition, or, in fact, that was just pushed out there, that they were hoping, Hewlett-Packard was hoping that they would be able to get some juice under their stock. They absolutely got zero juice. Hewlett-Packard closed at the lows of the day out here, folks. So no action. After the close out here, MELI, this little baby here. This is a online trading site in Latin America. This is up $1.73. Intraday, right now, it's up another $4. This used to be really a rocket ship, okay? Let me just see something. Maybe it's still at its highs. Yeah, it is still at its highs. Okay, so this is right now. I see what happened. Okay, so you had a high of $145. Let me put this on a monthly for you. You can see how this shakes out. This is pretty wild, actually. Can't bring it back that far. Okay, so you had a high of $145 in October of 2013. Then it goes down to 79. You got back to 144, and right now it's going to be trading at 138. Numbers on this go like that. Revenue, $161 million. Earnings per share, 76 cents a share. They beat the estimate, the revenue estimate. So that's always a good number, folks, when you beat the revenue estimate. AVGO just come out with some numbers. Let's see what they have to say. AVGO, this has been a one-way trip, no doubt. That's Avco Technologies. They manufacture semiconductor products in the radio frequency business. That closed at 118. That's up $6 also. That's trading right now at 118. And this equity here, when we take a look at this has been a one-way street. I guess as the market's been a one-way street, but this has absolutely been a one-way street from $31 right now, and you're at $1.18. Numbers go like this on Avco Technology. This is what you have. The revenue, net revenue, was $1.6 billion. Earnings per share, the estimate was $1.94. They pulled in $2.09. So they absolutely got some juice behind that move also. We go take a look at YY. Let's see, what is this stock? YY. That's a funny... Okay, so YY is a communication social network that engages users in real-time group activities through voice, text, and video. The company's platform is currently free. The company intends to monetize its user base through internet services and online advertising. This closed at $55.38. That is trading at $55.35. That was down 10% out here today. And it looks like, no, this is interesting. This one here, this is just was going south with some juice out here today. That's the way that this was set up. This was breaking out lows. If we take a look at this on a daily, what you had out here is that this was breaking down of a very large ABC structure on the way down. In fact, your 8 point on this, probably, if we put this on a weekly, there's going to be a large ABC down. Nah, it's not the end of the world. Yeah, this is going after $51. Right now, you're at $51.08. That little baby is going to go after the $55 area. Inside the commodities market out here today, this is what we had inside the commodities market. Let's see this. The largest mover, gasoline, was up 5.8%. Heating oil, 3.6. Crude oil, 3.6. Silver, 2. On the downside, coffee was going to get cheaper. Coffee was down 3.6. Sugar was off 2.5. Cocoa was off 2.9. Don't forget, folks, if you happen to be driving home right now at 5 o'clock Eastern Standard Time, right here at TFNN, our man, Mr. Andy Hecht, is going to be doing a webinar. It's a free webinar. You can jump right on. You go to TFNN. You go to the carousel right at the front. The webinar is from 5 to 6 Eastern Standard Time tonight. Let's go over and we take a look at the XAU and the HUI inside the metals and mining. What we did have out here today is that we got some movement inside the XAU, inside the HUI. What we want to see, we want to see more price spread. If we look at the XAU first, this is what you have. You got outside the downtrend. We went up $1.40. So right now the XAU is at 75.40. The 75.40 brings it inside the smaller range. What we want to see it do is get inside 75.75. We had hit 74.43. Inside 75.75, which is the low of January 26th, would be a big deal. Why? Because that would say, number one, you're going to go after the high, and this is where this gets really cool. The XAU very well could be an ABC structure in the way up. 62 would be your A, 83 is your B, your C is at 73, which would give you a 93 A to B equals C to D. It has all the characteristics. We had gone up on volume. We pulled back on lighter volume. We've been all over the place on this pullback since January 21st. We go take a look at the XAU. Same type of setup in the XAU, but both of these are set up pretty cool. What we do need is that wide price spread accelerated volume. If we take a look at the XAU, that was up $1.41 today. It's inside the smaller range, which is 75.10. The larger range, the XAU is right next to it. The larger range would be we get back inside the 75.75 area. You get back inside that, same type of setup, very well could be an ABC structure on the way up, and this would be a 20-point ABC structure, which would, hold on one second. What did I just do? I just did the same one. HUI, I'm sorry. That was crazy. HUI, okay. I'm saying to myself, hold it, those are the same numbers, man. That is really weird. HUI, we get back inside the HUI. What we have with the HUI is this. HUI was up 326 today, trading at 187. The HUI has to get back inside, for the larger range, 189.71. Right now we're at 187.32. HUI set up as 151 is the A, 211 is the B, so you got what, 49.59 at $60. Your C is 181, that gives you a 240. So in both cases, these babies are set up for very large ABC structures on the way up. We'll see if, in fact, we get the volume as we start moving up into those B points. A lot of the stocks out here acted correctly. That's going to bring us right back to what? It's going to bring us back to what that whole dollar wants to do. What we are doing, we're coming into the end of the month. And what is the end of the month? The end of the month, of course, is window dressing. Last 2 days of the month, first 2 days of the next month. We'll see how this window dressing shakes out. If, in fact, folks are basically staying where they're staying, moving out. What we had out here today is you got all the indices at highs, contraction of volume once again. What I do expect is that they'll hold this thing tight for a couple more days. You got to hold it tight for a couple more days, get those statements done. The last trading day of the month is going to be Friday, right? Get those statements done. Then you get a whole new month next month, and we'll see where that whole thing does shake out. I suspect, as I've said many times, it's going to be the dollar move. The dollar move, folks. And what's really strange is that when you look at the fundamental aspect of it, the fundamental aspect of the companies coming in with earnings, they're saying, hey, we're losing money, and we're losing money on the currency transaction. So it's really wild with the dollar wanting to go down, and that the market doesn't like the dollar going down. It's like, okay, why? This is Tom O'Brien. This is TFNN. You stay right there. We'll be coming right back. And, of course, don't forget, if you'd like to come to that workshop, it's free. It's 5 to 6 Eastern Standard Time. You can sign up right in the front page of our website at TFNN.com. We're going to be right back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. So we had the Dow finished up 15, Nasdaq was flat, S&Ps were off a couple bucks. Metals, we'll see whether that can get more juice. Overnight, folks, what I expect you're going to see out here is this dollar is going to be what's going to be dictating things inside that metal market tomorrow. Because the dollar basically has some juice to the downside right now. If we bring this up intraday, let me show you this intraday here. So we take a look at this, and we'll put this on an intraday chart. And what you're going to see is that the accelerations are on the way down, are basically decent. But what you also have is that you have a index that was at 94.45. It is running down to the lower end of a consolidation that it's been trading in. And what we have is that when you go back and you look at the, I'll bring this back just a little so you can see it, because what's sticking out here like a sore thumb, you have 94.17. See, right now we're at 94.26. So 94.17, that was generated out there on February 20th, is hanging out there. That's a high volume swing low. That's on the intraday basis. So that's saying, like, okay, when Europe opens up, which is 3 o'clock in the morning Eastern Standard Time, that's saying that, hey, we can go after that. You go after that and you break that, what is that going to do? That is going to open up the February 3rd time frame to get whacked. And the February 3rd time frame is the crucial time frame to really understand, are we going to come off the highs with volume? That's how, on January 26th, we made the high. We came off that high with volume. We've been going sideways with lighter volume. You've been trying to get into the high with lighter volume. Each and every time it's failed. We'll see how that comes back into it, because if, in fact, that's what we do, and my take is that that's what we will do, by the way, that is when you'll see the correlation inside the metals market and the dollar get right on track. And on track specifically is that metals are priced in U.S. dollars. And if you want to see something that is absolutely amazing, and you talk about the markets are fear and greed. If you want to see how there's zero fear in this market, you only have to go look at Southwest Airlines. Southwest Airlines, folks, okay, is trading out at $44.12. It was down $1.23 today. Nothing. It's at its highs. But the number is, this is how wild this is. Southwest, okay, admitted yesterday that they didn't inspect 128 jets as they should have been inspected, meaning the rudders on them, okay? So, Southwest, listen, this has been a great airline. I mean, I like Southwest. But I'm cognizant of getting on planes in a big way, because the fact of the matter is that, you don't inspect planes, well, guess what? You're flying in a box and you're flying up in the air. Bottom line, though, and when I saw this today, I said, this is amazing about there's zero fear. Because what happened is this. Southwest turned around, and they're the largest operator of 737s, okay? The FAA gave them 5 days in order to finish the inspection on all their planes. Southwest come out and said, okay, listen, we have done 80 planes. We have 128 planes, and the FAA has given us 5 days to do this. And we are going to fly these planes, okay? What had happened is that they had grounded the planes for 6 hours themselves, which is really cool, on Tuesday. And that's when they discovered that this lapse had come into being. I'm sure they got so many regulations that probably it's a mistake. It's not certain. I'd say it's just a mistake. But my take is, this is the crazy part about it, is that they probably looked at it and said, okay, this is still okay, we can do it. And I believe them. But I'm going to the fear and greed in the marketplace. In the marketplace, guess what? That didn't do a thing to Southwest Airlines. That in itself is saying a huge amount about greed, fear inside the marketplace. There is zero fear. I mean zero. And people are used to every single day markets being up, period. So in that context, well, that's not how markets work, folks. That is how our markets have worked for quite a while right now. There's no two ways about that. And we'll see how this whole thing does shake out. If whatever you own, go look at where the October 15th swing low is, because those October 15th swing lows, folks, are getting hit one by one by one. Lumber liquidators today, you talk about getting taken to the cleaners. Yeah, down all of, what was it, $18 in one day. And guess where it went? It went right to, down $18.15. Goes right to the October 15th swing low. It's like, how the heck does this work? Because it is bizarre. There's no two ways about it. It's bizarre. But that October 15th low, it's out there. It's hanging out there. It wants to get hit. When you look at the S&P, that correlation is, that's down dramatically from where we are. Never mind if the Fed's worrying about raising rates. The October 15th swing low in the cash S&P is, we're 2113. The high of the low is 1874. The low is 1820. That's a monster number. That's what? That's 200. You're talking 18. Well, we get 100 points, 200 points. Oh my God, you're talking about almost 300 points. 300 points would be a shocker. The market right now, if the market goes down 1,000 points, people will be in shock. Never mind 300 points. So the bottom line, if you have one like that, get your stops in, folks. That's what it comes down to. Andy Hecht, 6 minutes, folks. He's going to do an outstanding webinar for you. It's a free webinar, and what it's all about, folks, is it's the technomentos inside the energy market. What he's going to be teaching, he's going to be showing you what you should be looking for inside the energy market. And what I'm talking about is not just talking about the price of crude oil, a barrel. Well, what he's going to be talking about, he's going to be talking about the crack spread. He's going to be talking about what you should be looking at inside that crack spread, and how does that relate to oil in general. Well, if you're an equity trader, one of the cleanest ways that it relates to it is that when you are buying and selling refiners. Why? Because if we take a look at the price of oil, of course, oil got smoked. If you take a look at the price of Valero, one of the refiners, guess what? That just went from $42 in January 14th, and we're dealing at what? With February 25th, and it's $61. That correlation has everything to do with the crack spread. What will happen when the crack spread changes and it goes the other way? What it does is that it grabs profits off the refiners immediately. That's when Valero went from $71 down to a price point of $13. So if you want to really get a nice understanding of how the technicals and the fundamentals work inside the oil market, check it out on the front page of TFNN. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night. Safe night. Look forward to speaking out right here tomorrow. Go get them, folks.